Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Plug Power, ticker symbol PLUG or plug. And so I am recording this on Sunday, November 23rd. Wanted to go over the chart because some things happen that stand out to me that might be of interest to you guys. But yeah, what we can see is it has pulled back pretty notably. It looks like it closed on Friday, November 21st at a price of $1.98. Might be important. We'll have to look over at Max Payne. Maybe we close below that. Maybe momentum is shifting or going to continue to the downside, but maybe momentum will shift and go to the upside. So we'll have to consider that. And that's kind of what I'm betting. I basically have a very small, effectively paper trading position, experimenting with something I wanted to go over with you guys. But before I get into that, I do want to say thanks to those who voted in the poll. Either way, I would have gone over plug. But since it is kind of late on Sunday, I might have pushed it off. So thank you to those who voted. If I do post a poll, please make sure you vote. Let me know which one you're excited for, and I will try to cover it. And I must say, I do like going over charts on the weekend when, the markets aren't moving. We got weekly data to look at and stuff like that. And one thing that I did want to talk about are some of the videos. I do have a playlist. I've tried to organize them a little bit better so you can look at the historical plug videos that I've done. It looks like I've done about 45 of them. But this last one that was purely focused on plug power came out a little over a month ago, I think. And, I just really kind of talked about Thesis of how I think that, the AI energy demand could be good for companies like Plug Power. But then I did follow up on it about 2 weeks ago. It was really just a video focusing on watching an auction that I was hosting close out. And I went over Rivian, Plug, Tilray, and Neo in that video. And I did add some stuff onto the plug chart that I did not have up in this one. So I will include a link to this video in the description of the video here and also the pinned comments. You can easily access that if you want to get my most recent perspective on plug prior to, or I guess between, this video that I'm currently recording and this video right here. There is a little bit of information there. But anyways, coming back to the chart, and one thing I guess I should note, I'm going to be trying to do this moving forward, is I have the y-axis on the log chart, on the log scale. I just think that's a little bit better for looking at things bigger picture. And, I think that that's just a better way to do it. Looking at it on the short term, it doesn't really change it too much. Although if I do flip over to the linear, it does actually, spike up more. But then I think that gives us, rather than it just being, spike up and pull back, we actually get, more resolution over here, with it on the log scale. So just pointing that out. And I wanted to go over some of the drawings that I had in the previous video, the one specifically where, I did that bidding war, watch that. And one of those things is this, let's say long position kind of tracker where when I recorded the video back here, I was thinking, well, I could see this going up higher. And so that seems like, a pro to the upside. But I do see that there's risk to the downside, like this level that I have drawn here at 189, corresponding with like the consolidation highs over here, thinking that was prior resistance. That could be some support. And we did pull back to that, but we did break below. You can see it says stop at 78, being just approximate. It's probably not locked into place, as you can see up there. So really just approximate. But I was just thinking that, if it did come down to like 189 around there, I'd stop out of a position. And then, if it did go up, that'd be great. Of course, it came down. If I would have had a position, I would have gotten stopped out. But one of the things that I've learned, maybe you guys have experienced this as well, whenever I place a stop loss, I get stopped out around the bottom and then it goes higher. And so when this came down, I was thinking about that And I started to think, well, what we're seeing here, at the bottom when we did, gap down, and we have since nearly, yeah, we filled a gap. We actually closed up here, so we haven't filled the gap. But this was, increased volume that got bought up. And, I don't know where it's going to keep going. But what I did, if you guys are curious, I'll share it with you right now. I decided, because, I'm kind of intrigued by this, but don't want to have a huge position, don't want to spread myself too thin, because maybe this does go down to 1 or something, who knows. But I now have a whopping 3 shares, nothing too crazy. My average is at $1.84, closed in the green, so that's good. I'm going to get another share at 176 if that happens. Let's see what the low was on November 19th. The low was 170. Let's see what was the low on Friday. Not 176. I'm not really sure where I get the 176, but I have that order placed. Very small position, so in all honesty, I really don't care about it. But the important thing is that I have a stop loss placed now. And the reason why I have a stop loss is because I really have a small position. So there's no emotion. I don't care if I lose money. It doesn't matter. Very small position. But I kind of wanted to have this experiment where I map this out with the risk to the downside around 189. That would be my stop loss. I would have then gotten stopped out. And seeing that having happened before, this would then go up. And so I decided I actually have a stop loss place. Let's see, what was the low over here? On November 19th, the low was 170. So I actually don't have a stop loss placed at 170. You might think I'd have a stop loss placed at 169 because I'm an idiot. But I think that it would actually be bad luck. 166, I could see that because multiple sixes is kind of like bad luck. But a 69 is good luck. And so I would feel bad getting stopped out at 69 cents. If you think I'm joking, I kind of am, but I don't think it matters. So you might as well have fun with it. My stop loss is at 166. And the reason for that, very personal, not because of the devil or anything like that. And not because of what I just said before about being at 166, but because I think that's a 10% loss. So I just did that math and it's like, oh, it's 166. It's a little bit lower than 170. That's fine. And so if this does come down to during market hours, if it dips down to 166 during after hours pre-market, it's not going to be triggered. But if it opens below or trades below or at 166, that will be triggered. I'll be stopped out at 166. I'll lose cents, so I don't care. But I just thought that was a nice experiment, so I wanted to share that with you guys. Sorry for the ramble. And if you're wondering why I'm rambling a little bit, I'm not too deep, but I'm not going to be streaming tonight. Wanted to be sharing some joy with you guys, so maybe that's why I'm rambling more in this one, because I just don't. I'm tired. I don't care. But I guess that's a little bit of a disclosure that I'm not really intoxicated or anything, but I just care less. And so maybe that's useful for the analysis. But anyways, with that, what was this range that I had drawn here? What does that, okay, so that was based on, this is getting interesting. I'm discovering this with you guys. It's based on the high over here. So that was on May 14th. It was 490. Also, I think that's very psychological because, people see, oh, it's gapping up. Probably, I don't know what it did in the pre-market, and I'm not going to screw up the chart enough to get into it. But over here, gapped up massively, and I need to add earnings. I removed earnings for a thumbnail, and let's see. I'm sorry. No, I don't want to do chart template. Let's do alerts, events. This is what I want. Sorry, I'm trying to get better with TradingView because I now have a paid subscription to it. And so I want earnings on there. And so, yeah, that kind of, followed earnings over here. Gapped up. Everybody's like, oh my gosh, $5. I'm going to make some money. And let's see, that was on a Tuesday, so it's not on a Friday. which, could correspond with options expiration, stuff like that. But yeah, up here. And also, one thing that I should note about the rambling and about this, I'm just a guy on the internet, just like you. I just like to communicate by making videos. It helps me with my thought process. So take everything that I'm saying with a grain of salt. Maybe you agree with me, maybe you don't. If you don't agree with me, let me know, but be respectful about it. Maybe we could talk about it. Maybe you will shed some light onto my lack of vision and we can grow together. I say that because sometimes people are very rude in the comments. That's especially happened with Neo recently. And, but yeah, plug anyways, 490, everybody thinks it's going to 5. It doesn't get there, gaps up, and then sells off. Everybody gets rugged up there at 490. So everybody has this like psychological mental level, even, over here with the little top there, July 16th, 2024 over here. May, that was 2024. Sorry if I didn't say that, May 14th. But yeah, look at this, high over here. So this high, July 16th. By the way, that's my half birthday. But that high, 334. And over here, what was the high? 332, cents away. A lot of people had their hopes up, and that's the way the market plays with us. So I think it's really good to be thinking about that. But it doesn't always have to. Over here, broke above, but didn't get up to 590. And I had drawn this doodle thinking that, it might get rejected, bounce from around 330, and then go up, but it actually just broke down. So I'm going to delete that doodle because I was clearly wrong about it. It happens. And so what we've done since then, a little bit of hope that we could have had, this yellow line here that I have drawn, that is the 50-day simple moving average. That did not act as support, or at least it did not long-term. Did consolidate there a little bit before actually breaking down. And so that's kind of why I thought this seemed like a good, risk to reward management, that if it did come down, I'd be stopped out. I'd lose, it looks like 30%, but I'd have the upside potential of a gain of 85% or so. So that seemed, reasonable to me. And let's just see. Yeah, that's to 489 is how I have that drawn. Which the high over here, maybe I should just, I don't know why I have it at 489. Maybe because it is locked in place. It is at 490. What am I thinking? Why is that green line there? Or that green thing? Oh, that's because of this. So what I should probably do is adjust that to be, 490 over here. Maybe this is helpful for you guys with TradingView. I'm just adjusting that top side to 490, and then the bottom side, the stop level over here, to that would be 189. And so, yeah, that, I need to then lock that in place though. So we have that for reference, and I would have gotten stopped out, but I didn't. And so now, I have a new stop loss. And, I'm not worried about it at all. Very small position, really just kind of testing my appreciation, my understanding for that. But yeah, I think that this could be going up to 5, and kind of like the thesis around energy and AI. And also this comes from listening to Elon Musk talk about, I think it was when he was on Joe Rogan. It might have been when he was on the All In podcast. He was on like both of those the same day. They got released the same day. Kind of crazy. He was wearing the same shirt, so I'm pretty sure he did both of them the same day. And I believe both would, be in Austin, so that makes sense. But during one of those podcasts, he talked about, nuclear. Everybody, I think that nuclear would be really good. But he talked about, nuclear is like, you have a small reaction. And, that's great. But at the same time, we have this massive reactor in the sky, the sun, and we need to figure out how to utilize that, because it just puts out so much more power than any number of nuclear reactors. And with him and with SpaceX and stuff, that expanding out the way to transfer energy from space to Earth, harvesting energy from solar fields in space. I think that's really interesting. And also in space, depending on where you are, really, not so much, but you're not going to have shadows because, like, if you're in North America or, it doesn't matter where you are on Earth unless you're at the poles during certain times of year, um, you're going to have shadows. But if you're in space, you're not going to have the Earth casting a shadow on you as long as you're far enough away from it, or at least it could be, marginal. It could be very limited, minimal. And so I think that's a very interesting, a very compelling argument for energy. Also, there was a recent, he was on stage with Elon and Jensen Huang from NVIDIA, and they were talking about, energy, AI, chips in space. And so, I'm not trying to go on too big of a tangent, but I feel like that's kind of that's extrapolating this energy problem that we have to space, whereas I feel like Plug is kind of extrapolating it in the other direction, more to Earth. And I feel like I don't know enough about it, but like hydrogen energy, fuel cells, less energy output than like nuclear. So it's kind of in the different direction, but I feel like the thesis is that we don't have enough energy. So any energy is going to be good. But I don't know, whatever hydrogen fuel cell companies, some of them may go to zero. I have no idea. Plug might be one of them. Plug might not be. Plug's been very impressive here, I must say. In this pullback, I'm going to stop the rambling. I should have just streamed, but then none of you had watched this, just like over here. None of you watched that. 72 people watched it, whereas over here, 178. So, I got to target the videos. Hopefully these rambles are helpful for you guys in your thought processes. But we have seen a pullback to the 50%. That's on the log scale. And that 50% is around, 179, I think is what it is. But, 170, that's where we tested. If I flip this over to the linear scale, though, that's the volume. I always go to the volume. I don't know why. But we pulled back to the support over here, which, we would see in the other chart as well, or the other scale here. But we have not gotten to the 786, which is around 150. But that could be like, novice traders, novice chartists are doing this on the linear scale, and they're seeing the 786. They're saying, well, I'm going to wait for 153. And that doesn't happen. And the reason why it doesn't happen is because if you flip it over to the log scale, it actually found support at the 50% retracement, which had confluence with prior resistance over here, then flipped to support, also testing this as support as well, and really getting into the kind of meat right here, this consolidation, that's going to be acting as support. And if we break a little lower, the 618's around 143 or 150, if we're that would be then tested over here. But looking at this on the kind of expanded view of the log scale here, we then kind of have, this confluence of the 786 at 104. Actually, I want to take a step back. I take that back, not going that low. The 618 here at 143, because we have confluence coming back here, this prior support could be support again. Also, that was backed up by this prior resistance. So that resistance became support over here, could be support again. But if we do break below, I got this level that I've marked here around $1, psychological level. 102 is the yellow line that I've marked there. The 786 is at 104. A lot of levels there. So I feel like if this does break below my stop loss, maybe it would find support at like 142, let's say. Let's have fun with it, 1420. But it could go lower. I mean, they could all go lower. This could go to zero. So, yeah, 50-day simple moving average. I'm going to move over to some moving averages just to see what those look like. I've just kind of got these like defaulted up here so I can show them real quick. This is the 50, 100, and 200-day simple moving average. And we can see it looks like the 20 just crossed below the 50, so that's kind of bearish, but it's lagging. But if the 50 crosses below the green line there, that would be the 100-day. That would be the 20 to the, let's see, the 20 to the the 20 simple moving average. I'm sorry, I am just getting used to these up here. So no, I think I just have the 20, the 50, and the 100. The 200 is not shown. And just to clarify, I don't have that marked here. That would be the red line, which, where is that? Sorry, I'm getting used to this. I am totally fumbling. I apologize. And so it would be there. But I don't think that's necessary. It doesn't go with the color scheme. I feel like I should probably not release this video because I'm just not being too coherent. But maybe there's some value here for you guys. I apologize. This is just kind of sloppy. But I disclosed my state of mind. So it's Sunday. I got to be at work early in the morning. My weekend was short because I had to be at work late Friday. This weekend sucks. But it's only a 3-day work week, so that's nice. But yeah, anyways, I think this could come down. You've got to be prepared for that possibility. But let's look at some options data, and maybe that will shed some light on what we're seeing. So maybe what's good to do before looking at the data here, let's look over at the max pain. I'm just going to zoom in so it's a little bit easier for you guys to see. Max pain for Friday, the 21st, was 250, and we closed below it. What actually did we close? We closed below 2. We closed at 198. So not so good. That's showing some weakness, and the momentum is to the downside. You want to go with the flow. And then we got max pain at $2 for quite some time, getting into January 150 for the monthly there. And then 2. Yeah, so this isn't telling me that this is not screaming it's going to go higher. This is telling me it could be around where it's at for the foreseeable future, but it could go lower. Let's look at insider stuff. I'm just going to zoom out so we can see this info a little better. We do have selling. It looks like on the 12th of November, so that was a couple weeks ago, 10,000 shares, which is valued at $29,000. In my view, that's a nothing burger as far as executives go, whatnot. We do see the executive or the CEO, the Chief Executive Officer, Andy Marsh. He looks like had a grant of common stock November 4th that might have corresponded with a warrant or something. Excuse me, like that. I'm not sure. That was at, hey, good luck charm, 269. That's $25,000. So it's nothing crazy. Sale over here in October. Yeah, I mean, none of this is huge, so I'm not concerned about that. So let's just go to the overview. If this loads as I move my hands. And so this is net call and put premium. We got the stock price in yellow going up after gapping down on Friday, going up. We should be able to see that over here that, yeah, I mean, closed on Thursday, the 20th, which was kind of a bad day for the market, closed at 189 and then opened on Friday at 188. So it gapped down a penny. Nothing too crazy, but it did go up. So that's good. And this might actually be, I'm going to remove the drawings and look at this on the weekly. I wanted to look at some other moving averages. I am sorry, I am a waste. This looks like it could be a bottoming signal there. Gap down. What we want to see now is next week, which is a short week. We want to see it ideally gap up to like 220, 225, and then close the week around 3. That would be superb. I don't necessarily see that happening, but that would be like, I believe, a morning star down here. I think that's what that pattern would be. That would be a reversal, that it's going to go higher, so that would be really good. But if that doesn't happen, and this continues to just go lower, that's also a possibility. So I think it's good to be prepared for that. And with that being said, I forgot, because I'm an idiot, I forgot to show the moving averages over here. So I just wanted to, let's fast forward to the current time. It's over here. Oh, I didn't have to do too much. I'm kind of an idiot. But hey, look at that. On the daily, it looks like we're getting caught by the, light blue line there. And by the way, I kind of like skipped with my words there. Sometimes the mic picks up very funny, weird noises. I feel like I just made one of those weird noises. But anyways, the, let's see, 50-week moving average, which is approximately the annual moving average because there are 52 weeks in the year. That is at 181. And, look at this. We gapped below it, and then we closed the week above it. So I think that looks really good. 181. So yeah, I mean, I feel like I don't have a lot of money risked, and I don't plan on risking a lot of money on it. But it's just kind of fun to practice the thesis. I feel good about that stop loss. I don't think it's going to 166. But if it does, then I'll reevaluate and could think about, 142 or $1, stuff like that. Not there yet, so 166. We do have above us, though, the 100-day simple moving average, and that is at 229. I don't have the lines marked over here just because I think it gets too cluttered. I'm reading the numbers from up here. And then we have that's the 100-week, not day, 100-week simple moving average at 229. And then moving up here, the purple one, that is at 859. That is the 200-week moving average. So it's approximately like the 4-year moving average. And yeah, I mean, this, and also, I mean, if we're thinking about this, it's kind of, I didn't intend it to be like this, but it's kind of, you can think of it like a rainbow. And maybe we want to add the daily moving averages on there. That gets too cluttered. But what we see is, like purple, blue, light blue, and then yellow. So that's like reverse rainbow. And we have them in that order over here. So that looks bearish as it's going down. But then we start to see the yellow, the shorter time frame line move above the two blue lines there. And so that's kind of a change in trend that, and maybe it's going to find support there at that 50-week simple moving average and then go higher. So, I mean, I feel like this is kind of compelling that around where it's at, $2, that could be, very nice. And that this could be continuing to go higher. And also with that, I'm such a space cadet. I did want to point out over here, we do have a higher low in the stock price, which corresponds with a lower low in the RSI. So that is going to be, I had it pulled up for the Neo video, but I removed it. But just type in bullish divergence there. I like this one. Bullish divergence. If we look at the hidden section of the bullish divergence, we have higher lows in the stock price, lower lows in the oscillator, which in this case is the RSI. That's hidden bullish divergence right here. That's what we're seeing in the chart. Higher lows, lower lows, lower lows. Okay. However, if we look at that on the bigger time frame, like going back to over here, we have higher lows, but we actually have a lower low back here. So there's no divergence there, bigger picture. So in order for that to have bullish divergence, hidden bullish divergence in the bigger picture, the RSI would have to drop below the low over here, which is 1952. So that's pretty bad. That's pretty massive. It could sweep the lows over here around 140, 142. The lows over here, to be precise, the low on September 9th was 141. So 142, while it's a fun number, 1420, would not be sweeping the lows. Would not be sweeping out those who have stop losses there. We'd have to actually go to 140 or lower. But that could give people a signal, hey, look, we've lost the hidden bullish divergence here. It's going lower, but then those people who don't take a step back and see, oh, but if this RSI has dropped lower than over here, which I feel like is probably not going to happen, then that would be, still hidden bullish divergence on a bigger time frame. As long as it doesn't go lower in stock price than over here, then I think that could be really good. But yeah, with the drawings that I have up here, I think that there's a lot still to catch this coming down to like 143. So anyways, enough of ramble there. Let's go over to this. Stock price, as I was saying, gosh, I'm such a space cadet, goes up. And we got the red line here that is net put premium effectively flat. Net call premium in green came down by about $307,000. So that's kind of bearish. And if we do scroll down here a little bit, just above my head, we can see that bear bull slider, 49%, which is the majority in this case, considering that neutral, is on the bearish side. So that does suggest this could be coming down some more. If we take a step back, look at the past 3 days, what stands out? Got some net call premium over here going up about $500,000. Net call premium up here going about $500,000. So let's go back the past 7 days. Still, over here, $1.27 million net call premium going up. So that's looking kind of bullish. Right before that, the day before, drop in net put premium by about $1.34 million. So this seems bullish, selling of puts that a bottom might be in. This seems bullish, suggests buying of calls that could be going up. So I like this, but it's just like a couple $1 million. It's not, millions and millions of dollars. I would just say millions, but technically that's like 1 million and 2 million. So got to say millions and millions. 14 days, nothing really over here. So things have kind of changed. And the signal, while not necessarily on Friday, the signal is telling me that this is suggesting more bullish. And then over here, this was, net call premium going up at the top and then being sold right away. So this was like, FOMO at the top, and then stock price in yellow came down. So that doesn't give me much confidence there. If we look at this one contract that I don't know that I've ever held this, I might have. But just looking at this actually tells me that it's not looking so good. And the reason for that, and we could actually research this a little bit more. Video's over 30 minutes now. So hopefully, let me know if you like them long like this, if you like the rambles, even if I'm enjoying myself. I'll try. I don't typically do this, but it's Sunday and I'm tired. And I think that just gives you a nice disclaimer. I'm just a guy on the internet. And with that, calling myself out there, what did I want to see? I wanted to zoom in here. Let's see the past 3 days. Because on this contract, this is the $5 strike call that expires in June. 206 days between now and expiration. I don't like trading short-term stuff. I like looking at longer-term stuff because I get nervous and I doubt myself. Because I lose money on contracts, so I like to keep the expiration further out. But yeah, $5. And that's also coming back to the thesis of like the level up here around 490, You got to reinforce these things. But so for this contract, if we do look down here, and sorry about the sporadic movement. Just trying to navigate with the mouse just right. Okay, so dang it. Let's see, right? That's good enough. Good enough. I'm going to zoom in. That's probably going to screw it all up. No, that worked pretty good. But yeah, you can see these numbers a little bit better. I'm doing this for you guys. I'm not doing this for me. So let me know if you appreciate the zoom. Just type in zoom in the comments. I appreciate it. I'll probably forget what it means at the time I read, but I'll appreciate it. I'll probably remember because I called myself out for not. But yeah, so what we see here is decrease in open interest for that $5 strike call. And this is about 14,500 contracts. That's a lot. And we see that previous day on the 19th, about $500,000 traded. And then on the 20th, we saw about 670,000 traded in premium. But we didn't really see a massive decrease in the net call premium. Once the data comes out before market opens tomorrow, I'm going to be at work, so I won't be able to do that update or anything. But this just seems like a pretty massive drop going from, nearly 52,000 contracts open to now about 33. That's a pretty big drop. So that is like a signal that whoever had, let's actually do the math on this. Probably not too exciting, but this is how they get you in the markets. They bore you. And so you don't understand numbers, you don't do math, and you don't get these signals. And so what is this saying? So on this day, on the 19th, when we had, this massive volume, 22,000, but we didn't see a decrease of 22,000. We saw a decrease of 14.654 thousand. So let's type that in here. 14,654. Number of contracts decreased for this contract specifically. And the average fill for the day before was 21 cents. So let's multiply that by, 21 cents. And since each contract represents 100 shares, let's then multiply that by 100. And so this decrease in open interest meant there was a drop in open interest representing $307,000. I don't know about you. I'm not trading with $307,000. That's kind of a big signal. Is it a blue whale, the largest mammal on Earth? No. But is it maybe it's a minke whale, and that's still a pretty big whale, I think. To be honest, I used to study the ocean, but I did not study the biology. But yeah, that's a big whale. Maybe it's a sperm whale. Maybe it's a whale shark. I don't know. But it's bigger than me, that's for sure. And so that's kind of a signal that this is not going to go up. So for me, I am not planning. Oh, let's see. It's calculator. I can't zoom out with a calculator. I can zoom out over here. For me, I'm not planning on getting into this contract because the data here is telling me that it's going down. You see the red numbers there telling me it's going down. Oh, and I think I actually kind of wanted to look at that. So on the 19th, yeah, I super space cadet over here. So the 19th, this was the 19th. Yep. We see that net call premium going up. And so, it could have been just because, yeah, this does suggest buying. Maybe they were rolling. So maybe what we want to do, let's do some investigative degenning here. And so I'm just going to go to the flow data tab here. By the way, they're going to have a Black Friday sale soon. I need to renew my annual subscription, but I really like them a lot. Unusual Whales, I think it's a really great tool. That's why I end up over-explaining stuff, because I know not everybody has access to this, and I just want to make sure people understand what I'm doing. So what I'm doing up here in the filter is I'm just typing in plug. And what I do have this filtered. So the last contract that's shown up here is from November 17th. And that's because of this premium filter that I have here. So that is, let's see, let's count those zeros. $100,000 minimum premium. And so let's just change that to 50,000. Maybe we get something on the 19th. The 19th is what I wanted. No, we're not seeing anything on the 19th, but we do see some stuff on the 21st. And this is suggesting bearish. And we don't have that data, the change in open interest, until market open or just before market opens on Monday. But this is, $4 strike call 2027. And this is an alert. So the alert was repeated hits, time, and sale for the $4 strike call that expires January 15th of 2027. This is on the bid side, so this is suggesting selling, but that doesn't necessarily mean it's selling. And this total premium represents about $178,500. But we want to look at the 19th. So I'm just going to adjust this from 50,000 to 40,000. 19th, still nothing there. So let's do 30. Okay, so we got some stuff for the 19th. So let's look at that. That is interesting. This is the contract. I'm an idiot. This is the contract I already knew. it was on there. So, but really what I wanted to see is just other data on the 19th, I guess. What's my thought process here? I guess, I wanted to see this. And so I kind of filtered it to reveal that on the 19th. And I reduced that to $300,000, and I let's pull up the math, $300,000. So, that should reinforce. Hopefully this ramble is reinforcing the learning. But yeah, other things that stand out, let's think about it. That contract, it was selling. I've already shown you over here that it was selling. But if we come back, what are we seeing? Some bullish, some bearish from the 19th. Let's just look at the premium here. So this column, what's really big premium? Over here, $1.41 million. That is, I think, something that's interesting. That actually suggests bullish, as we can see over here, miraculously just above my head. So that's $1.4 million. And this is the $3.50 put that expired on the 21st. That could have just been people taking profits on the 17th before expiration because they didn't want to exercise or be assigned or whatever it would be for that. And yeah, so I don't think that's bullish. I think that's just taking profits. So because of the expiration date, it's behind us. We closed below 350. They made money on that. So that's not surprising. Nothing, I could dive deep into this, but I've spent 40 minutes rambling, and I'm sure that I'm going to make people unhappy with how I did this video. But it's Sunday. I'm just trying to enjoy myself as I do this. Yeah, I mean, I think that, largely, I have to say, largely because of this contract that I'm kind of watching. I mean, it's been on my watch list, my bookmarks watch list, just above Ed's head there. I don't have any other plug ones on my list, but I like to keep an eye on it. I'm not sure when I added that. But right now it's telling me it's not the time to buy calls. But maybe I'm wrong in that sense. And with that being said, that's why I have 3 shares. Maybe I'll get 4, maybe I'll get stopped out. It doesn't matter. But just kind of exercising this thesis around this risk to reward, and that I tend to get stopped out around the bottom. And I would have gotten stopped out around the bottom. I just added, and if it does go lower, that's totally fine for me. Yeah, so I mean, I wish I was more compelled to think that this was going up. And I do think that there are some signals over here that it's starting to wake up again. That this could be the bottom, with that yellow being the stock price. But yeah, I mean, I think 142 because, fate loves irony and stupidity, and 1420. If I do get stopped out, I'll be looking at it at 1420. And I'll do a follow-up if you guys want me to do a follow-up. If this video performs well, I will be surprised because it just seems like a total mess. But this is just trying to understand the market and presenting that to you guys. And I would have streamed tonight, so this is just kind of my way of sharing that energy with you guys. But yeah, I mean, shorter term, there is that hidden bullish divergence, but bigger picture, I mean, so I guess that could mean that we're going to see a little bit of a bounce, but then we might ultimately be coming down a little bit lower. But yeah, I mean, the RSI is at 35.62, so that's pretty close to oversold, but it could be getting more oversold. So do be prepared for that. And yep, I hope this was helpful for you guys. But as always, those are just my thoughts. If you found them helpful, let me know in the comments down below. Make sure you subscribe to the channel for more content like this. And I will follow up with plug when something does stand out to me, or if this video performs well and something stands out to me. Take care, you guys. Have a great start to your week and a great holiday week if I don't see you again. Thank you so much for watching. I'll see you later. Bye, guys.